beginning of the first topic, clearly we've seen an acceleration in sustainability-focused reporting and drives at product standardization. And arguably some of the most important within Europe have been the EU taxonomy and indeed the green bond standards. And Foppe, I'm very keen to hear your perspective on how those will be impacting your work as a fixed income investor.
Yeah, I think that both are connected, of course. The green bond standards are part also of the EU taxonomy. But if you split them those, I think that the EU taxonomy is more impacting the data gathering. So in the end, we have the obligation, but also like every sustainable investor is now already doing, just measuring how sustainable our investments are. And that means also data gathering. But what we're lacking right now is, I think, a common sense, a common future. We expect that the EU taxonomy will give us that to all the investors, to all the asset managers, and that is very helpful. However, what we a bit worried about is that it is now we have already a very long time discussions about it, and it becomes a little bit complex. And just for an asset manager like we, it is also good to have one template, as to say. So, and also for the issuers, I think it is important to know what the figures are they have to deliver. Too much is not always better, as to say. The other one, the agreement standards, I think it is also there good to have harmonization, to know what's green, what's social, or what's sustainability. However, we have already a lot of frameworks in place. So I think the added value there is more that you have one standard, and everybody is standing behind. It's clear, but it's also important for regulation going onwards. And just looking to ourselves, we already assess green bonds with our own methodology, but we expect that the agreement standards will give more in-depth criteria to analyze that. Back to you, Arthur.
Certainly, and Foppe-Jan, you raise, I think, an important point there around the EU taxonomy and concern that what's vastly becoming a quite dense document now can become potentially quite complex, and some people have argued it can become a little bit too restrictive. And Maria, I would very much welcome your thoughts. Is there a risk that by trying to fight greenwashing, our standards are becoming too narrow and sort of risk impacting sort of market growth?
Thank you, Arthur. Well, I think one main concern, and that was actually quite represented in the EU Green Bond consultation on the standard, was about grandfathering. Because you obviously don't want this standard to be putting off the efforts that have already been put in place with the last couple of years market growth. And I think that's part of the question as well. And here, I think because the criteria and the levels are quite demanding, that the complexity of the overall document is definitely is definitely a concern for everyone. You need to make sure that the issuers that have already proactively built a green curve or sustainable, and that have already built their framework, should have some kind of eligibility to this new era, the new market that will come. Obviously, there is a line that needs to be drawn somewhere, but I think looking at the assets which are being financed behind those green bonds, like the ones that have been financed already, and the future ones under the framework, which are already existing, the standard should allow some of this flexibility. Otherwise, it will put off issuers which have already been quite active in this market. And that's for the grandfathering part, which is, you know, transferring the existing pool of the green bond market into the future green bond market, which is a very important aspect. As per future issuance, yes, we can say that the expectations behind the taxonomy and the green bond standard are high, but they serve the purpose of removing this kind of greenwashing fear in the market, and that, you know, needed to be addressed. But, you know, the taxonomy will not just have an impact on the green bond standard, it will also be the point of reference for sustainability linked bonds, which I'm sure we'll talk about later. And here you've got a greater flexibility as a corporate because, you know, you will be able to focus not just on projects, but also on your overall transformation. So I think the different applications that will cascade from the taxonomy being put in place will allow everyone to find a way to issue under this new standards. Thank you, Arthur. That's
helpful. Thank you, Marie. And I guess a common thread there, but both on your point and indeed in Foppe-Jan's point, is around this sort of merits there of having more of a common language, right, from an investor point of view, and then when you're producing your own reports. And I guess, Gail, if you sort of fast forward in the next few years, when we have the EU taxonomy fully embedded, is your sense that your own fund climate reporting will be a lot easier and it will be a lot more aligned?
Yes, I mean, I think it's difficult to imagine that it won't fulfill that function. We are already seeing benefits of using the technical index. I mean, and specifically referencing the kind of industry, you know, kind of the NACE mappings index at the back of the document, where we get such a lot of certainty with regards to emissions for, let's say, cement, or, you know, required emissions level per kilowatt hours for, say, electricity producers. And I mean, already we do a lot of engagement around carbon emissions, and, you know, to have that level of certainty, it aids our discussion. And because we know that the research behind it has been put together very much with reference to Paris 2050, and you know, the requirement for all of these different industries to bring down their emissions levels to, you know, what the index specifies. You know, it really is just about technical certainty, and, you know, everything that we've been discussing up until now on a theoretical basis and gearing up towards compliance 2050, you know, bringing down emissions. The technical index is a huge step forward for that, and it just gives a level of a level of certainty, really, to, you know, benchmarking where a company is today, and, you know, where their ambition for 5 years' time would put them. So I would say, yeah, I would definitely say it's hugely helpful with regards to climate impact, and for us has already been so in conversations with companies around where their current emissions levels are. You know, the cement manufacturers was a really good one. You know, we got back some responses to some recent engagement, and emissions per cementitious product were all roughly around the same thing. And we could then compare that with the level that was cited in the technical index, which was roughly, I think, maybe about 40% or 45% lower. And that amount of information, or that amount of research to get ourselves there, would have been probably time consuming to the point of probably not having to outsource it. So yeah, we've leaned on it heavily thus far, and I imagine that we'll continue to do so. And it will definitely, it has already started to shape our view on climate impact and where the companies we invest in should be going and are going.
You mentioned there, Gail, I guess the key point there in terms of carbon related reporting and indeed climate change, and while we've been discussing the European frameworks, clearly a framework growing very rapidly in global prominence is TCFD, carbon financial disclosure. I'd be interested, Marie, in your views. Clearly, the UK is set to make this mandatory. How do you think TCFD will evolve next year and thereafter?
Sure. Well, let's not forget that the TCFD origination story is very similar to what we had a couple of years ago with TLAC, which started being non-mandatory and became then a market norm. And you actually, with TCFD, this is from the very beginning, you know, what the optimists were hoping for, and hopefully what is actually happening, because there's not only, you know, regulators enforcing TCFD as being mandatory, like in the UK, to listed companies and private companies as well, but there's also the fact that so far the latest progress report shows you that 60% of the 100 biggest corporations have supported or disclosed under the TCFD. And what it means here is that there's going to be a capillarity effect, because those biggest corporations will have levels of expectations of disclosure and measurement towards their suppliers and other stakeholders, which will raise the bar in smaller corporations. And that will have, I guess, a more natural also spread of, you know, the TCFD as the standard, because the point here is to create a market level playing understanding of how do we measure, how do we disclose, how do we discuss. And it gives investors and corporates finally this kind of common language, common metrics to talk about climate risk and opportunities, specifically to the sector that it's actually, the company is actually acting in. And I truly believe, I mean, as an investor, a sustainable investor, I believe that actually going through the exercise for a corporate or any kind of company forces you to fully assess and understand what, you know, the risk you're actually facing with the scenario analysis and the value at risk, etc. And maybe to structure yourself in a different manner in the way that you can better respond to the risks that are coming in 5, 10 or 20 years. So that can only be beneficial and a value creation, a source of value creation. Thanks.
Great, thank you, Marie. And I guess just Gail, Foppe-Jan, is there anything else that you'd like to comment on when it comes to the new wave of ESG reporting coming our way?
I think the biggest or the most obvious area is data. This thing that is a universal struggle that, you know, whether you are trying to produce an impact report or whether you just simply trying to ask the issuer of a green bond for some updated impact metrics, or you know, finding a common framework or a way to produce an impact report for a green bond fund, or knowing that even the impact metrics that you've reported are the same or done in the same or calculated in the same way that you know, your peers are. I think there are a lot of questions out there with regards to data, and as soon as more companies are accessing a similar or the same thing many more times, you know, we get many more iterations of that data, and, you know, by the process of natural improvement, I hope, the optimist in me hopes that data will be the biggest winner in the next few years, because I think that's what we need.
Yeah, from my side, Arthur, I think one phrase, keep it simple. We don't want that issuers are stepping away from the sustainable bond market because it's too complex to deliver all the data. So let's focus on that.
And reflecting perhaps a little bit on sectors and supply from different sectors. Gail, I'd very much welcome your views on any particular corporate sectors you'd like to see more supply from.
Well, I suppose we always look at our green bond fund in light of, well, in comparison to a similar duration fixed income fund that isn't a green bond fund. And, you know, we do have differences in the amount in the sectors that we invest in. In our green bond fund, I think we've got maybe about 40% sovereigns and then 20% utilities and 20% financials. And it would be great to see that diversified, you know, to the point of where our other fixed income funds are. And we do get the question a lot from clients, and, you know, it's the natural it's a natural question. It's any sectors beyond, you know, the bulk of where we've seen issuance come from to date. And these are probably the sectors that are not seen as industrials and maybe do have slightly less to decarbonize, but are still important nonetheless. And then obviously the more materials heavy sectors. I think we've seen a bit of activity from Lafarge recently, and you know, more from that kind of more from that corner would be lovely. I think you know, anything that would allow us to kind of have the same sector allocation as a regular fixed income fund when we're comparing to the benchmark.
Great. But Marie, Foppe-Jan, anything to add there in terms of shout outs for sectors or types of issuers you'd like to see more of?
Well, I would tend to second what Gail just said with regards to expected supply from those, you know, higher emission types of sectors, and we know the ones, right? The ones that haven't been participating in that area for a while, but you know, issuers that have already started their transition journey and communicate about the sustainability strategy and have started, you know, investing in projects and activities which, you know, are a testament of their willingness to achieve those sustainable goals. I think they are definitely eligible now under this format. They're supported by the wider market with the ECB eligibility, and I think to the same extent that the transition bonds concept was trying to address this, we really need them. We need them to come to this market to make sure that there's an overall representation of our economy as investors, as Gail said, to match either benchmark objectives or really to match the reality of things. And we, as investors, we would really welcome more of this deeper industrial issuance that needs to transform.
Foppe-Jan, from your perspective?
Yeah, I both agree with Gail and Marie on that. What I like seeing from a portfolio perspective, yeah, of course, more diversification would be useful. Still, green bonds are just dominated by financials and utilities on the corporate side. However, we have to be critical in what typical issues are there. The whole oil and gas change movement is there's several issuers are eligible now, I think, also for the green market because of that. But we definitely are not looking for every sector to come to the market because of diversification purpose. It has to fit, and I think that we have seen in the past some less good examples, as to say. So yeah, the credibility of the green bond market is still important, and we prefer to see the better example, the good examples for example, and maybe less than more issues coming to market with question marks.